Now, let's get the read from Market Watch's Scott Martin, Heather Zumarraga, and last but not least, Susan Lee. I think, Susan, you're at the exchange?
I am, yes. So we are counting down to 27,000 for the Dow, and when that happens, we'll get a nice souvenir hat to take home as well. But it's taken us a long time to get here, right? 483 trading days so far, more than that, actually. That's so from 26 to 27 is going to take longer than 483 trading days. That's basically, I'm looking at this number here from Charles Brady. This is important because that's January. It's taken us this long from January to get to 27,000. Compare that to 25 to 26,000. That took 8 trading sessions. So I guess it's taken us a while to get here. It's taken 3 stocks to get here for the Dow. That's Apple, Boeing, and the like. So, you know, it's nice to see some more breath taking place on the markets.
All right. The aforementioned Charlie Brady is our stocks editor. Just to distinguish he from me, I'm the stocky editor. There is a difference there. I just wanted to learn. But he's an encyclopedia, and he's been following this very, very closely, the broad-based nature of this. You know, Scott Martin, that's been the thing that everyone has been saying. All right, if this is all initially based on optimism, we got the Canadian uncertainty out of the way, that we're now cobbled together a deal, a new NAFTA, if you will, that could set the stage for China. If you look at the automakers and what they're doing, GM, what it's doing, all the various key components of the Dow, save just a precious few, are advancing. Is that a natural run-up or a little too frothy for you?
No, it looks good to me. I mean, you remember the market is this great future discounter. It trades on future expectations. So while things may be great today, as I believe they are, the market thinks they're going to be even greater in the future. And to piggyback your comment about GM and some of the automakers and the industrials, Virginia, which have come all the way back too, how about the tech companies? You know, the tech companies, Neil, that were in front of Congress and getting destroyed over privacy concerns and things like that. Facebook aside, I guess. But some of the Googles, the Apples, the Microsoft, the Amazons are all at all-time highs or near so, as they're starting to show how much of a future kind of potential they have in our economy. So to me, everything is really firing all cylinders, and really it looks like the only hiccup that is ahead is these possible midterm elections, which could be a small wrench in things, but even those are certainly clearing up to some degree and pushing the market higher.
Right. We just say the latest sentiments are in the part of Americans who they prefer to run the show there has narrowed a little bit. I don't put much stock in them because they're so volatile, but Heather, on that and what consumers are doing, this is going to be a crucial Christmas shopping season for them. The latest indications are, even in the face of higher prices, they seem to be happy to pay them, and they seem to be the most optimistic they've been in at least 18 years. Do you buy that, and do you think it's going to be a strong season?
I do buy that. I'll be going shopping this season, Neil, so I'm sure you will be too, as well, Susan and Scott. But look, consumer confidence is near 18-year highs. The jobs data this morning at 7-month highs since February. The ADP report was just off the charts, so the jobs market is soaring. I think Amazon prices might go up a little bit, given that they raised minimum wage to $15 an hour. But all eyes are on consumer spending, as that accounts for 2/3 of our economy. You're right. And the stock market's off on a tear, I think, because of this trade deal. This is a great thing for our economy. The U.S. is going to once become, again, a manufacturing powerhouse because of USMCA. So this is the USCMA. So this is great, Neil. Still getting the name right.
There are a lot of letters here. That just blows me away here. I think Brian Wesbury is with us. And Brian, you know, as someone who crunches a lot of numbers from a lot of different industries and fields and states and localities, one of the things that struck me in the private jobs data that we got from the ADP folks is how robust it is and how it seems bosses are okay passing along incentives and big pay increases to incentivize people to come to them. And that is something we have not seen in quite a while. In other words, the gains there, I know there's a flip side. The Federal Reserve can look at that and say, you know, we don't really like the inflationary implications of that. But it is an interesting new wrinkle, is it not?
Neil, there's other evidence that showed it before today's ADP. We have the lowest initial claims that we've ever had relative as a percent of all the jobs out there. This is an extremely tight job market. There are more job openings than there are unemployed people. And if you take, forget the average hourly earnings numbers, because that's what everybody talks about. There's about 8 other measures of wages, and all of them have been showing signs of picking up. So what we're having is a competition among companies to find workers. We're pulling people off of disability rolls. We're pulling people off of welfare. This is an amazingly strong job market, and the ISM services number today showed it as well. So this economy is cooking along, and it's because of tax cuts and because of deregulation. Those two things are really boosting economic activity.
Yeah, Susan, I was talking to one trader earlier on who was telling me over the phone, who cares whether the tax cuts did this or not? It's happening, and I like it. So I guess that ends the debate there. It makes perfect sense to me. Susan, do you see, at least I know on the floor, it's a little different than when I used to report from there, but I'm wondering, do you think now that we're getting more believers? You know, it's interesting. Half the population is involved in this market. The bullish bearish sentiment is not at crazy levels where you would think this would end. So what's your read from the floor and the folks you talk to there?
Oh, they're very bullish. You know, I'm going to correct myself. I haven't drunk enough coffee this morning. I've been on since 6 a.m., so I'm just going to correct myself, make sure I have these numbers correct for you, since we're a stickler for accuracy here on Fox Business. So I'm just going to go through this once again. So this range that we're in, this 1,000-point move from 26 to 27,000, it's taking us 180 days, right? It looks like it's going to take us 180 days plus. That is the longest stretch since that move from 18,000 to 19,000, which took 483 trading days. Okay, I feel much better. Yes, there's a lot of optimism on the floor here.
Nice going there to keep the ratings going.
So touche, Susan. People want to buy, and yes, earnings will prove it this quarter. That's what they're saying.
All right. You know what's interesting about that, and Heather, I'll raise this quickly with you, but with everybody.
Yeah.
This market has climbed a wall of worry in light of the trade stuff, and in light of what's going to happen to Brett Kavanaugh, whether he ever makes it to the Supreme Court. And now even in light of this New York Times story on Donald Trump, is he all he says he was, and was his family playing fast and loose with the IRS to get tax benefits that might have been illegal. I poured through that. There are a couple of different ways you can examine it, but it has not dissuaded the bull. And I find that amazing. Whether you get into the weeds of these stories or not, that's a lot of reasons to at least pause, and no one is pausing.
No one is pausing, and the markets climb a wall of worry, and they're also very optimistic if you're already in the market or if you're looking to buy at the same time. So no matter how we got to where we are, Susan's accurate. 27,000 on the Dow is here. Here we come. Get your baseball cap ready, and that's what's going on in the economy. There's a wave of optimism sweeping over us.
That stupid cap is the dumbest thing I've seen.
I want to see you in it, Neil.
Well, get your one.
Does anybody keep those?
I used to be down there. And then, of course, I'm talking when the Dow hit 1,000. So I'm dating myself. But it is so idiotic. It just seems, stop it with the hat thing. But that's just me.